Well, technology and artificial intelligence names have soared, and Palantir, a software company, provides AI data solutions to large clients. So joining me now with more on why he's betting against Palantir, including a 50% drop expected, is Tony Zapparo. He's the CEO of Equity Set. Tony, bullish on Tesla, we learned earlier.
Yes.
Changing his tune, but bearish on Palantir. Why?
A lot of it just comes down to the valuation and the multiples we're seeing on, for example, Tesla versus Palantir. Palantir specifically, last 2 years, it's definitely done a lot, right? Great business model, move to profitability, but when you're looking at PE at 200 plus times, which again, can't necessarily read too much into it because it just turned profitable, but other metrics like price to sale, price to book, revenues increased about 30%, and those have doubled or tripled. And we think it's swept up in a lot of the AI hype. It shot up to 26, right? It's coming down to around 23, 22, and we think it's got a lot more to go.
How does this company engage in the AI space?
So they do a lot of software, right? And they work on government contracts, and that's one of the things that is a risky move. Is their latest contract? I think it was 330 million pounds. It was underwhelming, and again, who knows fiscally what's going to go on, and so the spending aspect is they rely on a lot of government contracts in order to kind of fuel their coffers and drive revenue, and that future is a little unclear as well.
Interesting. So in terms of moving forward, do you think that this is perhaps a harbinger of what might be to come in other AI names?
I do. I think we saw a little bit of that breakdown with semis, right? With SMCI, with Nvidia, the way they moved very quickly down, right? 10, 20, 30%.
Pretty fast.
In a single day. It was very take your money and run. And so I think Palantir has got swept up in those names, right? And what's funny is what's been a boon for Tesla in terms of mentioning autonomy and AI, its price has been hammered, right? So it's kind of turning a corner to the upside, we believe. But when you look at Palantir, it's done the opposite. And so we think that's going to level out, and it's going to meet somewhere in the middle, which in our opinion is a 12 to 14 price.
Interesting. So do you think semis in general could pull back somewhere between
Yes.
25 to 50%? It's hard to wrap your head around something like that, but that would be dramatic.
Yeah, and again, I mean, Nvidia did 11% in a single day the other week, and that's where we think around 600 to 700, right, for Nvidia, right? Which again, is a considerable pullback from where it is. We don't think that's unreasonable just because of how far they've come.
Yeah.
And we really haven't seen a lot of major profit taking in those names, and so we think there's a bearish slant to the AI names, right, to Palantir. We just think it's got to clean up the charts a little bit, right? The names have to go down. You have to kind of weed out the people that aren't in it for the long haul, right? All the traders, get profit taken out of the way, and then they can consolidate and move back up.
Interesting. Now, knowing that an election is on the horizon in November, and perhaps a new administration could change some of these government contracts with Palantir, what's the time frame of this call for a 50% drop in that stock?
Yeah, honestly, end of year, right? Within the next 3 to 5 months, we believe something like this is going to be healthy in terms of kind of a pullback. And so it is before the election hits, but again, that's another risk, right, reward that you can look at. So we feel the names, AI, Palantir, everything like that, it'll be healthy if it goes down to a 12, 13 price handle.
What is your overall view on the markets, knowing that the Fed has changed its tune in terms of forecasting higher rates for longer, despite kind of what I would call caving to the market in December of last year, based on pressure from traders?
Yeah, cautiously bearish, and I say cautiously is 2 months ago, honestly, was relatively bearish because valuations just seemed out of whack. It's come down fast over the last couple weeks, right? 3 weeks of down weeks, and so it wasn't as orderly as a sell-off, and so I feel that means, okay, it could rip higher a little bit, right? And higher in terms of the market's been stubborn, right? If you calculate the top 10 holdings, they're 35% of the S&P. We did a little analysis on like, okay, what if they fell 15%, right? the market only is falling 4 or 5%. And so a lot of the other names people are rotating to are buoying that. And so that's where bearish, because I feel another 5 to 10% is healthy in terms of a correction. But yeah, it's always been stubborn to the upside the last couple months.
What are the factors driving that thesis, and how much of it is the Fed?
Yeah, I think, and I was never really, I was always surprised how many rate cuts people thought there were going to be, right?
Right.
It just didn't make much sense unless there was a calamity, right? Unless there was some kind of credit crunch or something with the banks. And so higher rates for longer, I feel, hasn't set in yet, right? Things are good, right? The consumers are spending, right? The economy's kind of humming along, but we've never had this quick of a rate hike. And so as it starts to set in a bit more, if consumer demand, right, and spending tends to wane, and then companies, a lot of commercial, and institutions have to refinance at higher rates, I think when that starts to come into focus, whether it's done or not, right, at that moment, I think that's where the fear of the correction will come back, because borrowing costs have skyrocketed.
Really. And I know that you follow, obviously, the technology space very well. Everyone in the market pays attention to the Fed, but it has been impressive, to your point, that the consumer has held up despite high borrowing costs, despite record high credit card debt. People are still spending. But then on top of that, earnings seem to be holding up as well, by and large, and companies actually initiating buybacks, upping dividends in some cases. How does that factor into your thesis?
And I think that's all a great aspect of why the market shouldn't be called for like a 20% right pullback, right, or a 30% fall or anything like that, is because things are going well. And so I think that supports the thesis that what's healthy, right, so over the last 25 years, the S&P has never moved up so fast or so consistently week over week, right? It just got overextended, right? And there's a lot of money, there's a lot of liquidity, and there's probably even a lot more on the sidelines that people want to put in place, right, if it pulls back. And so I think it factors by it not being a doom and gloom scenario, but it focusing on a healthy 5 to 10% correction, and until you see that, not putting a lot of money to work in the market. Okay,
so you like Tesla at these levels, you don't like Palantir at these levels. What are some other stock calls that you like or dislike?
Not a fan of Chipotle, so if we move into the kind of quick service, love Chipotle food and think it's a great business. Again, valuation reasoning, and so then I think if you're looking to alternatives, McDonald's, Wendy's, right, almost going back to a little bit like John Deere, going to industrials, looking at valuation a little bit more closely to make sure a lot of the names aren't overextended or caught up in the hype.
Yeah, I see Chipotle stock pretty much at a record high. That stock up 1%, and I think its earnings are on top actually after the close as well.
Yes, and it's got the stock split coming up in June, which we think, again, helps it. But it's 65 times for a burrito maker, it just doesn't seem to make sense for us right now.
Are you getting exposure to fixed income or even some dividend plays, preferred stocks, as the Fed has now changed its tune on rate forecasts?
Yeah, absolutely. And I think that's where a lot of investors, and where we see, is there's a mixed bag happening, which hasn't been the case when rates were zero, right, and so low. And so that's where a lot of money has gone out. The market still stayed propped up. And we view that as when you can get 6, 7%, or 10% on a little bit of the higher yield, riskier debt, that's a good place to be, because all the investors we're talking to, many are happy making that 6, 7%, right? And not having to worry about where equities go.
Do we hit new highs before we get a pullback?
And that's why I say cautiously bearish, because I think it could happen. I don't think it should happen.
Yeah.
But I think you go up to the 50-day on the S&P, which is about 1% or 2 higher. Yeah. And then I think what happens is a 5 to 8% correction down.
Yeah, fractional gains today. It seems like cautious is the right word to describe it, just based on some of the price action that we've seen of late.
Yeah, and exactly like you had mentioned, is there isn't a lot of reasons for the market to go down. Earnings are decent, right? They're good, and that's where with earthquake and natural disasters and the war that happened, right, or the threat of war and war that's going on, those are market movers, right? But sentiment has to shift, and there hasn't been a lot to make that happen, which is why the market's been so bullish and pushing higher, because why short it if there's nothing drastic going on.
So geopolitics, not necessarily a major concern for you right now, and I would say that that definitely has cooled off. I think kind of also helping the markets recover a little bit these past few days.
Yes, and that's where you saw Asian markets, right, when the whole kind of outbreak of the threat of war came in, they were down 2-3%, right? Got through the weekend, U.S. markets opened that Monday, and again, they down 1% or so, and so but they were down futures even lower, and so I think it's muted a lot of the bearish scenarios because we feel like maybe we're insulated a bit more in terms of an economy and a market. You need something really to chip away at that in order to see a drawdown that's meaningful.
Tony Zapparos, CEO of Equity Set, talking all things equities with me here at the Stock Exchange and from Chicago. We appreciate it.
Thank you.
Thanks, Tony.